Everybody has heard about crypto, but what actually is it? Today, we're diving into the world of cryptocurrency, without the confusing jargon or complicated terms. By the end of this video, you will understand what cryptocurrency is, how it works, and why some think it's the biggest financial revolution since paper money. Let's break it down simply. Cryptocurrency is a type of digital money. But unlike the money in your phone or your bank account, crypto only exists online. It has no physical form. There are no physical bitcoins you can put in your pocket. The name is a mashup of crypto since it uses complex codes for encryption and currency for money. This encryption is what keeps transactions safe and secure. Here's where things get interesting. Traditional currencies are centralized, meaning they're controlled by central banks and governments. They decide how much money to print, set interest rates, and essentially control the entire monetary system. Cryptocurrency flips this model on its head. It's decentralized, meaning no bank or government controls it. Instead, a network of computers around the world maintains and secures the system. Which brings us to the next question: how does cryptocurrency work? At the heart of it is something called the blockchain technology. Think of it as a giant digital ledger, a record book that keeps track of all transactions. Imagine you want to send $50 to a friend who lives in a different country. If you send it traditionally, your bank verifies if you have the funds, approves the transaction, takes a fee, and eventually transfers the money, sometimes taking days. But if you use crypto, here's what happens. First, you make a request for $50 worth of your choice of cryptocurrency, which is then broadcast to a network of computers called nodes and checks if you have the funds. Now it's verification time. The network validates your transaction using known algorithms and joins a new block, thus the name blockchain. It contains your transaction, along with many others that has happened before. Transaction complete. Your friend now has the cryptocurrency you sent, and the blockchain has a permanent record of it. This system makes cryptocurrency incredibly difficult to hack or manipulate. To change a transaction, you'd need to hack thousands of computers simultaneously, which is practically impossible. Now you might wonder, who maintains this system of verification process? Meet crypto miners. They are people who use powerful computers to solve complex mathematical puzzles and add them to the blockchain. As a reward, they receive newly created cryptocurrency. This process requires significant computing power and electricity, which is why you hear about the environmental impact of crypto mining. Now let's see some popular cryptocurrencies. Bitcoin was the first and remains the most well-known cryptocurrency, created in 2009 by an unknown person named Satoshi Nakamoto as a decentralized alternative to traditional currencies. There are many different types now. Some of the most prominent ones include Ethereum, Tether, Solana, Dogecoin. Each cryptocurrency has its own features and communities supporting it. So why has cryptocurrency become so popular? Many people see crypto as an investment opportunity. Early Bitcoin investors who bought when it was worth just a few dollars have seen their investment increase thousands of times over. While past performance doesn't guarantee future results, these stories of crypto millionaires have drawn many people into the market. For others, the appeal is the freedom and control. In countries with unstable currencies or restrictive banking systems, cryptocurrency offers an alternative way to store value and make transactions without depending on local financial institutions. Beyond crypto, the blockchain technology has potential applications in many industries. From supply chain management to medical records, it could revolutionize how data is stored and verified. We're even seeing countries experiment with cryptocurrency as legal tender. El Salvador made Bitcoin an official currency in 2021, and others are developing their own central bank digital currencies, helping cryptocurrency become more mainstream. Cryptocurrency comes with both benefits and challenges. Benefits include freedom and control. You have complete control over your funds without any middlemen. Lower fees. Especially for international transfers, crypto can be much cheaper with lower fees than traditional banking. Accessibility. Anyone with internet access can use cryptocurrency, making it quite accessible. Security. Crypto transactions are protected by powerful encryption, making it tough for hackers to tamper with the system. Transparency. Every transaction is recorded on the blockchain, a public ledger that anyone can check. While transactions are visible, the identities behind them stay private. The challenges include volatility. Crypto prices can fluctuate wildly, making them risky investments. Technical barriers. Understanding how it works and how to use it. The learning curve can be steep for beginners. Regulatory uncertainty. Governments around the world are still figuring out how to regulate cryptocurrency. Security risks. While the blockchain itself is secure, exchanges and wallets can be hacked if not properly secured. Very importantly, the environmental concerns. Significant energy is required for mining operations. So where is cryptocurrency headed? We're seeing increasing mainstream adoption with major companies are now accepting Bitcoin and other cryptocurrencies as payment. Financial institutions that once dismissed cryptocurrency are now investing and building services around it. Blockchain technology is finding applications far beyond, in supply chain management, healthcare records, and more. Whether cryptocurrency completely replaces traditional money or simply exists alongside it, one thing is clear. The financial landscape is changing, and understanding cryptocurrency is becoming an essential part of financial literacy.